What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Make sure you check out my video this weekend because I bought a new real estate investment trust in my M1 Finance dividend portfolio, and I'm hoping those TSLY and NVDY passive income firepower starts buying it, because I'm going to tell you, I am excited with this buy. I've been waiting to pull the trigger on it, and I will reveal to that's REIT, as well as provide my rationales. But right now we have 3 dividend stocks that are at a huge discount. Check out my last video. I did do a video on some dividend stocks that I'm targeting as well. All 3 of these dividend stocks are taking a huge hit, and it's very surprising. So you need to check this out. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check these 3 dividend stocks out right now. And what in the world is going on with Dollar General Corp? In the past 5 years, they've ran circles around the S&P 500. Past year, they've been down 55.90%. That is a huge dive. A lot of dividend investors are capitalizing on them right now. Retail is taking a big hit, and everybody loves Costco right now. Dollar General Corp has a dividend yield of 2.20%, a PE ratio of 10.96, average volume 5.33 million. Market cap is 23.49 billion US dollars. Tier range was 102.47 to 261.59. Holy cow, what a drop. Day range is 104.75 to 107.26, and its previous close was 105.59. So let's look into them a little bit. So I'm going to refer to Motley Fool, and Brett Schaefer made this article. I'm going to post the link in the comment section, and the guy deserves credit. It's a really good article. So the big thing is right here, okay, on top of its shrinking profitability, Dollar General is experiencing slow sales growth. Overall revenue only grew 3.9% year over year over the fiscal second quarter, and that was driven entirely by the new store openings. Same-store sales were actually slightly down in the period, not a good sign for the health of the discount shopper at these stores. When looking at the longer-term trend, compressing margins is not the end of the world. With a transition to more consumables, such as food, in its revenue mix, Dollar General's profit margins have trended downward as it reaches a greater scale, excluding the pandemic. It is no surprise then to see these margins come back to earth and continue to inch lower as management tries to keep products cheap for its customers. The bigger concern is slower sales growth. Dollar General is struggling to grow revenue at its existing stores, mainly due to declines in apparel and home products. While it's only been 2 quarters of disappointing results so far, this is enough to strike fear into Dollar General's investor base, which is why the stock is down so much this year. These weak comparable store sales continue, it'll be tough for Dollar General to grow its earnings for the next few years. These guys are at a discount. I'm going to go over the revenue trends and dividend history real quick. The revenue trends have been pretty consistent with them. So this is annually in millions US dollars. 2017, 21,986. 2018, 23,470. 2019, 25,625. 2020, 27,753, 2021, 33,746, 2022, 34,220, and 2023, 37,844.86. So I want to go over 2 things with them. So, and I really want to focus on them as well. Net income can be defined as a company's net profit or loss after all revenues, income items, and expenses have been accounted for. So their annual net income in 2021 was $2.655 billion, a 55.03% increase from 2020. Their annual net income for 2022 was $2.399 billion, a 9.64% decline in 2021. Their net income in 2023 was $2.416 billion, a 0.7% increase from 2022. Their net income for the 12 months ending in July 31st, 2023 was $2.169 billion, a 6.33% decline year over year. Their their net income for the quarter ending in July 31st, 2023 was $0.469 billion, a 30.85% decline year over year. One more thing I want to go over is earnings per share. So there are some promising things, but just keep an eye on the trends. 2021, the annual earnings per share was $10.62, a 59.94% increase from 2020. That's a given. That's a pandemic. Dollar General 2020 annual earnings per share was $10.17, a 4.24% decline from 2021. Dollar General's 2023 annual earnings per share was $10.68, a 5.01% increase from 2022. Their earnings per share of the 12 months ending in July 31st, 2023 was 9.76 or $9.76, a 2.89% decline year over year. Their earnings per share for the quarter ending in July 31st, 2023 was $2.13, a 28.52% decline year over year. So I just want you to be aware of these trends. Now I'm going to jump to their dividend history. One thing these guys have is extreme dividend growth. This is beautiful. So I'm going to start in 2015. It was 22 cents per share. 2016, it jumped to 25 cents. 2017, 26 cents. 2018, 29 cents to 32 cents. 2020, 36 cents. 2021, 42 cents. 2022, 55 cents. And 2023, 59 cents. They have a low payout ratio, which is very attractive, 24%. Dividend increases in the last 5 years is 5. Dividend growth in 5 years is 17.65%. If you bought one share, you made $2.36 with a 2.24% dividend yield. So these guys are a little bit more, they have more opportunity than Target, as I see that. So Target has a lot of issues with theft. Theft is going to be an issue with a lot of these companies, but I see these guys a little bit more powerful than Target. So this is just, again, I'm not giving financial advice. I don't own them. Make sure you do your due diligence when you research and purchase stocks. Let's jump to the next dividend stock. This one is not a surprise at all. Pfizer, it's sitting at 33.31. It's been down the past 5 years, 21.70%. Past year, it's been down 24.50%. Dividend yield is 4.92%. This is a discount. PE ratio of 8.88. Average volume 26.43 million. Market cap is 188.07 billion US dollars. Year range is 31.77 to 54.93. Day range is 33.01 to 34.08. Previous close was 33.91. So a few things that in pointers I'm going to bring out. They do have a lot of products that people need in the hospital. One thing that was big with their sales and their stock price was the COVID vaccine. Now, I'm going to be honest with you. I mean, I did have the recent COVID vaccine. This year, I'm not required to get it. I'm probably going to still get it anyways, because if I get sick once, and hopefully this train in the background isn't a problem, but if I get sick once, there goes my travel nurse pay for a day. So I want to protect myself as much as I can to, one, not get myself sick and, miss work. But I don't want to be really beat up so that, or have a high viral load so that I don't infect my patients or family members or anything like that. I'm still going to get the vaccine, but hospitals aren't really requiring it now. So that's a little surprising. The one that I'm at right now, I'm not going to say where, but really surprised. But they did a huge research on natural immunity and people that have antibodies. I find it very interesting. That's one thing I see with the stock price going down. But they also have medication out called Paxlovid. So people that have influenza, they take Tamiflu. You have COVID, you take Paxlovid. My understanding, and you can correct me if I'm wrong, a lot of you are pharmacy majors and healthcare professionals, but it does reduce the viral load over time, the viral replication. So I'm going to jump to their revenue trends and dividend history. I'm going to just show you some of their trends from 2016 to 2022. Revenue-wise, annually in millions US dollars, 2016, 52,824, 2017, 52,546, 2018, 40,825, 2019, 40,905, 2020, 41,651, 2021, 81,288. You can blame the pandemic for that going up. I mean, well, you wouldn't blame, but you can give kudos to the pandemic because they've made a lot of money from the vaccine and with Paxlovid coming around 2021, 2022, and then they were at 100,000. But they have so many products also that are in demand. Again, a lot of you can correct me if I'm wrong, but Solumedrol was a big medication that was recently in the hospitals. They were running out of stock in it. And Solumedrol is a steroid that take IV. People that have COPD or asthma, they have an exacerbation. They were a little short on that product, and kind of scary. And I really think, again, I'm not making a medical assumption, but with the Canadian smoke and everything, people are probably getting flare-ups. And I think that could be a correlation related to that, because I've never seen a shortage of Solumedrol before, which is an injectable medication, a steroid that helps people breathe, or you get an allergic reaction, they'll inject Solumedrol in you to help the anti-inflammatory process. So I'm done ranting about that. Let's jump to their dividend history. So I'm going to start in 2011. It was 20 cents, 2012, 22 cents, 2013, 24 cents, quarterly distribution, 2014, 26 cents, 2015, 28 cents, 2016, 30 cents, 2017, 32 cents, 2018, 34 cents, 2019, 36 cents, 2020, 38 cents, 2021, 39 cents, 2022, 40 cents, 2023, 41 cents. They have a payout ratio of 34%. The dividend increases in the last 5 years is 5. Dividend growth in 5 years is 3.45%. So if you bought one share, you made 164 with a 4.84% dividend yield. Now let's jump to the final dividend stock. I was almost going to have a third dividend stock. I had my list, but then Kelly, who's an avid YouTube subscriber and follower on X, and you guys need to follow me on X, he brought up Conagra Brands, and I'm like, okay, let me look at it real quick, because I own them, and I'm like, wow, let me go over them real quick. And she was on the money. Conagra Brands, I own them. I learned about Conagra Brands through Matthew Ramey on his website. I'm probably going to try to get him on here as well. I did a little bit of digging with Conagra Brands, and I'm like, man, they're in the stores everywhere. They got a lot of products. I use a lot of their frozen veggies that I steam in my microwave. They are a deal, and they are a deal. Kelly was onto something, because in the past 5 years, they've been down 21.02%. Past year, they've been down 21.51%. So they are at a discount. Dividend yield is 5.28%, a PE ratio of 18.66, average volume 3.84 million, market cap is 12.68 billion US dollars. Its year range is 2622 to 4130. Day range is 2622 to 2660. Previous close 2653. So I'm going to go over the revenue trends and dividend history. I really like their revenue trends. So 2021, their annual revenue was 11.185 billion, a 1.18% increase from 2020. Annual revenue from 2022 was 11.536 billion, a 3.14% increase from 2021. Annual revenue in 2023 was 12.277 billion, a 6.42% increase from 2022. The revenue for the 12 months ending in May 31st, 2023 was 12.277 billion, a 6.42% increase year over year. Conagra Brands revenue for the quarter ending in May 31st, 2023 was 2.973 billion, a 2.8% increase year over year. Let's go over a little bit more just to see how good these guys are. So the two things I really like, revenue and gross profit. So gross profit can be defined as the profit a company makes after deducting the variable costs directly associated with making and selling its products and providing services. So two things that I really like. I've seen an increase in 2021, a little bit of a decrease in 2022. 2023, an increase. And then the most recent news, Conagra Brands gross profit for 12 months ending in May 31st, 2023 is 3.265 billion, a 15.01% increase year over year. Then the gross profit for the quarter ending in May 31st, 2023 was 0.783 billion, a 9.81% increase year over year. I like that. Now we're going to jump to their dividend history. Thank you, Matthew Ramey, and thank you, Kelly, for bringing this up. 2011, quarterly dividend growth. Check this out. 2011, 23 cents, 24 cents, 2012, 25 cents. A little stagnant, and then guess what? Little, and then a little bit of a cut, and then 2017, watch this, 21 cents. Then they jump up to 28 cents in 2020, and then 2021, 31 cents, and then 2022, 33 cents, and they just cracked 35 cents. Their payout ratio is 48%. Number of dividend increases in the last 5 years is 4. Dividend growth in 5 years, 13.67%. If you bought one share, you made 140 with a 5.28% dividend yield. So I'm going to be honest with you. I own Pfizer. I own Conagra Brands. There's no way I'm going to sell them. They're very good companies. They're in-demand companies. Dollar General, I consider them a little bit better than Target right now. I really haven't went over the theft or anything, but Target's theft is what concerns me the most. People are going to usually try to steal other stuff than food. I'm just being honest with you. That's the way I see things versus what's going on at Target with merchandise being stolen. You see people go into stores in Nordstrom, steal a bunch of stuff. I mean, usually food is not one of the biggest things being stolen. Alcohol, I can see, food and beverage. I'm sorry, alcoholic products. But other than that, it's stuff that I've seen in the past. And you see all these videos with people robbing stores. They don't really go after the food. They go after TVs. They go after the other stuff. So I just wanted to be clear on that one. So Dollar General, that's why I picked them for one of the three. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. And I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not take this in any form of financial advice. This is for entertainment purposes only on my YouTube channel. Again, one more time, entertainment purposes only. No form of financial advice should be taken when I post these videos. Seek investment advice from a financial advisor or somebody certified to give financial advice. I am not giving financial advice. Do not ask me for any form of financial advice. I'm just going to say, speak with a financial advisor, or I can't answer that. Be honest with you. I own Pfizer and I own Conagra Brands. I plan on being long in them unless if something crazy happens like a dividend cut or so. Investing in stocks or investing in the stock market is a risk. You can lose money, you can gain money. So I'm just being clear on that. There is a risk when it comes to investing, so make sure you do your due diligence. I hope you take care and have a great Wednesday.